let's get Maiya on and chop it up. Maiya, what's going on, brother?
Hey,
Welcome,
can you hear me?
welcome.
You're good, loud and clear.
Awesome. Okay, yeah. Thanks very much for the invitation today. Really appreciate that.
Yeah, absolutely, dude. I think obviously on the show we're ICM focused, and it's interesting seeing anyone experiment. Obviously, we talk a lot about believe, and then there's this other angle, and I think you've had this discussion publicly a few times where it's like you got this angle that believes kind of taking where there's no real equity tied to it at the moment. And you're kind of on the other side of the fence where you're like, no, no, we need legal representation of ownership in these companies. And I think you're taking like the form of equity to be that. So maybe Maya, tell us a little bit about what you're building at Street, and then we'll get into your background. It's a little backwards, but we'll start there.
Yeah, so I was always very excited about what Believe is doing, and I think it's still one of the greatest visions this cycle that these startups can like bootstrap so many users, so many also a lot of funding by tokenization. But kind of the issue from the beginning on was where do you have accountability for these founders? Because you can just launch a token right now for your startup and abandon it the next day. For example, if Cooley launches something, why the hell would they continue to have this token around if they can also raise 15 million from A16Z? So yeah, you have to have something for accountability here, and which ensures holders that this token will be continued. And yeah, the kind of the easiest way to.
I know it's a little early for me to butt in, but we've never really had accountability on chain up until this point. Why do you think that should change now all of a sudden? And I'm not against this take. I'm just curious to your thoughts there.
Because it's a good thing to have accountability, because if
Yeah.
there's no accountability, then you just end up with all these charts which go to zero, and there's no real value created. You know, like you don't have to implement accountability if you want to continue living in trading in a space where you have to constantly live in fear that you're getting rocked. But I don't think it's a bad thing to implement accountability.
Of course
And
not.
I think every trader, I mean, I'm coming from a complete trading background. Every trader wishes to have like accountability layer. So these teams actually build something and actually continue using the token and create value for the token.
No, that makes sense. Maybe touch on your background real quick. You said you're a trader. Have you always been a trader? What kind of, I guess, maybe gives you some credibility to just build this thing out, build Street out?
Yeah, I've been trading since 6 years. Have been in the beginning always like Onchain. Have been trading these kind of utility tokens back in the days where Ethereum was still a thing. Nowadays it's more everything on Solana, but yeah, I think I have a pretty decent knowledge over what performs well and what doesn't perform well. I have a great network of other traders who have like the same I guess edge over the market, where they understand where narratives are, where value is, what teams are going to perform good in crypto, and which you should avoid. So I think I could run, and that was like an idea of mine of a few months ago. I could run a very profitable VC firm as well. So I initially wanted to like go a bit more in like the VC direction, but the kind of issue is that these ERC20 tokens and SPL tokens, they aren't good enough for for I guess investing and for distributing to other people. And there's, as I said, no accountability, no real value there. They're all backed by promises and kind of artificially kept in high valuations. So yeah, I really spent a month kind of inventing ERCS and making it as good and as legally enforceable and as regulated as possible. And we received a ton of feedback of it.
So explain ERCS a bit to us. That seems to be the crux of Street, kind of the underlying thing that's going to make this successful. Explain ERCS.
So to put it very simple, it's essentially kind of equity anchored token focused on end user distribution. That means that there's like an SPV or a foundation which holds equity in the token, which holds equity of the startup. And the token is kind of anchored by this. So in case any M&A event happens, be it an exit, IPO, merge, an acquisition, then you can have like discretionary reward for these token holders, so they can receive a portion of the equity proceeds. So yeah, it's kind of M&A focused, M&As, merger and acquisitions focused framework, which allows like economic upside to a startup without it being a security. Because right now you don't really have economic upside to any belief startups, if we're being honest. Like it's just a lot of it is built on like a trust me, bro. I'm gonna give you back some of the cash in case I exit at some point. And yeah, this is kind of the only solution for this. And yeah.
So you mentioned that in case of mergers or some sort of liquidity event, you know, token holders can expect a reward. Does that make it a security, or is security even something to worry about anymore? Like, can you explain that to us?
So they can't, like we can never promise them a reward, but through a DAO mechanism, they can expect that there's going to be a vote on this reward. And I mean, we all know how kind of DAO votes go, and if the majority of people, I have to be very careful here because it's like a language where you have to avoid some terms, I guess, to not get in a dispute with the SEC. But we're in a DAO vote where everybody's like aligned on a certain goal, then you can kind of expect or predict a goal to actually go through. I mean, most DAO votes aren't very close. They're always like 99% against 1%, and I totally expect, and we will very much enforce the DAO vote to also go in that direction. But I have to be careful here with language, so I can't promise anybody something, but I think the majority of people understand and know how these DAO votes usually proceed.
I guess we'll just get this out of the way now, guys. Like, if there's anything Maiya can't say because of legalities, like sometimes he's got to tiptoe around these things. So just expect that for probably for this whole interview. But that begs a few questions. I got two really importantly. Number one, the SPV or the foundation that's holding this equity. How do we know like they don't just get out of here and dip with the equity and never reward anyone, never pay out
So
anyone?
yeah, actually, if you scroll a bit up
Okay.
on the page, there's a bit more. There's like a 20 scenario kind of playbook where every potential outcome is
Oh, look
explained
at that.
in extreme detail. It's over 95 pages of detailed kind of a detailed framework where everything is explained. For example, this is S1 founder equity withdrawal. So that kind of touches the whole scenario in case a founder kind of withdraws the equity or just kind of doesn't want to continue the SPV. So if you click on the document link here, you'll get like a complete explanation on this scenario. Yeah, there are a lot of legal details here in place and a lot of contracts we have to mutually sign before an ERCS token is created. And yeah, we've kind of solved all these potential dangers, and yeah, these things are not possible because the board, like a TLDR of this, the founder is never in own control over the SPV. There's a board of members here, and every transaction of that SPV. So if somebody wants to withdraw like equity, for example, then it has to be double checked, double signed by anybody. So nobody can just withdraw something.
Nice.
Big Mac said this library. Sorry, yeah, this library is great. The docs. Where can we find these docs? I see they're in a couple of your posts. If you just go on the StreetFDN Twitter account, I'm sure you guys can find it there. Would you say that's probably the best place, Maiya?
ERC-s.com is actually the quickest way to get it.
Perfect. ERC-s-.com.
ERC-s.com. Yeah, it's in our Twitter bio.
ERC-s.com. All right, there you go. So my next question would be, we kind of covered the different scenarios. What if the SPV bought, say, 60% of the equity on chain, and so they had the majority vote in any decision they make? How do you decentralize it enough to where there's not one controlling entity, you know, able to basically swing any DAO vote?
So yeah, currently the DAO vote isn't with the token. Like for example, if Clet did this, which they're currently building on, the DAO vote wouldn't be by Clet. That has one major benefit, because we want these founders, and we the kind of whole framework builds around that these founders want to get more of their own supply, because initially they give up, for example, 50% of equity to this SPV. So suddenly the founder has 50% equity less. So they obviously want to gain back control over the equity in case they exit eventually. So what they do, they buy back the supply of the token to eventually have a larger cash proceed in case that distribution happens. So we can never put this DAO mechanism on the actual base token. So for CLAD, it wouldn't be able to vote with CLAD, but with a other token. Again, I can't promise anything. I can't speak about this, but I think eventually Street should have a kind of governance token. It will also have like other. I'm never gonna kind of deploy a value empty governance token, but yeah, eventually it will be governed by something. Let's say it that way.
Okay, cool. I guess real quick, so just to summarize for everyone that isn't really catching on, quick summary, what is Street in simple terms? What is Street? What are you guys providing and doing?
Essentially it's tokenized equity without it being a security. That's the easiest way.
Perfect. Yeah, I like that. You guys are chill. Sorry, you keep breathing. I can hear you. Come on.
No. I was just gonna say, so basically what you're doing with the equity and the foundation is you're aligning, or correct me if I'm wrong, you're aligning the incentives for founders and traders. Like it just like traders want to accumulate a token and speculate or what have you, and maybe even invest for, because they see the long-term vision. A founder also using this kind of model would be incentivized to sort of, accumulate the token just in case they have some sort of a liquidity event like a merger or etc.
Yeah, so there are exactly three things which make this kind of valuable. The first one being that it's kind of backed by something tangible, by something real, which is equity. The second thing is that it's that these founders are incentivized to buy back their own supply. And the third thing is that they can still run anything any utility token right now can do. On it, you can run buybacks, kind of referrals, incentives, utilities. Like you can run anything these current tokens have as well on this. So yeah, it really has this kind of triple benefit which creates value in the end.
Wow. So you also so tokens, obviously, like from like ETH days with some of these devs and utility projects in the past, they've kind of created or tried to generate value through like adding some sort of like utility, right? Like whether it's like staking or using it in the product or what have you. You're kind of through Streets, tokenomics and this ERCS, you're basically adding another layer of value by creating a way for founders not to not rug, essentially.
Yeah, I think it's actually two other layers of value, like having these incentive to buy back and actually having it backed by equity. The latter makes it really valuable, for example, for like a bit more sophisticated market participants who want to have upside exposure on a startup. Yeah, I think we've kind of seen enough of the ERC20 tokens and these utility tokens. I mean, these charts look horrible, and in the end, I think we should kind of stop beating around the bush and bush, yeah, and bush, okay, and kind of actually say what like the majority thinks, and it's that we want tokens that go up in price, and it's as simple as that. And I think ERCS is the best way of ensuring that.
And the last question I have on this, my bad, Dom,
Good.
is when you're thinking of like kind of like a launch for these tokens, like what would the launch look like? Would it look similar to you know, something like a bonding curve? Like what does that look like?
Good
Yeah, so
question.
bonding curves are cancer. I hate this idea of bonding curves. It's especially if you have like a something which is kind of tied or at least reflects the equity value, then it's so fucking unfair to give like some random FNF kid like 2% of equity, and your like first engineer which worked here for 2 years every day is also does also just own 2% of equity. So I don't know. I'm not a big fan of this of bonding curves, and I don't want to provide any value to these FNF sniper retards, to be honest. So yeah, we have some ideas here. We have an in-house mechanism, which is kind of a fee decay mechanism. So it kind of starts with 99% fees and then goes down to 1% fee. It's kind of similar to like a Dutch auction,
Price
like a
decay.
liquidity bootstrapping pool. But I'm a big believer in like giving founders all the freedom that they kind of need. So in case anybody wants to launch on Belief, for example, we won't say no to that. We will not advise against it. If somebody wants to launch on Pump.fun, even though then we will probably advise against it, but it's still, they can still do that. And yeah, we are also not like chain centric, so we can serve Solana, Ethereum, Base, Arbitrum, even Berachain. Like everything is possible here. So yeah.
So to touch on this, you're not a launch pad, you're more of a standard. How is it that you guys profit? How do you guys benefit from this?
So yeah.
Because it's like, it's launching on Believe, or it's launching on Pump, or it's launching on Base. It's kind of agnostic, as you say. Yeah, I'd love to kind of get insight there.
Yeah, so I'm a pretty big believer that this is something which we can do for over 10 years. Like this is like a it's definitely not like a I guess quick launchpad like, for example, Heaven did, where they just saw a problem and immediately like offered the solution. In the beginning, we won't take any kind of volume fees. So everything, for example, like if a startup chooses to have 200 BPS volume fees, and we will take 0 of that. We do take like some advisory equity, but that's performance based, meaning if you perform well on our standard, we take a bit more, and if you don't perform well, we won't take anything at all. This just kind of
Do you have like you said, it differentiates, but do you have like an average number, 1 to 3%, 1 to 5%, 0.5%, anything we could kind of have tangibly?
It's very unique and tailored for every startup, because some require more legal work, because we also cover the legal costs of this. So some for some which are, for example, less matured, so pre-seed or like a low seed valuation, we do take a bit more, like around 1 to I guess 5 if it really performs well. Like then it has to like absolutely be the reason why the startup succeeds. But for like larger companies, like seed stage, where they have already at like a 40 million to 60 million, maybe more valuation, then we'll obviously don't take like such a large advisory equity cut, maybe down to 0.5% to 2%. I think that's it's kind of the fairest approach for both us and for the founders, and especially having it performance based is very fair in my opinion, because then we don't take a large cut if it doesn't actually perform well and doesn't help the startup at all.
So this is really interesting. It seems like you guys are going to be very hands-on with a lot of these startups that you're kind of, we'll call it incubating. I even see this tweet here. And by the way, these numbers that you're saying, incredibly successful ground game you've been putting on. It seems like you've been visiting, San Francisco quite a bit, finding these startups and really, breaking into that scene. At the very bottom, I see if you will also receive a 100K cash grant if you decide to adopt the ERCS framework. You must have a pretty big team, pretty well-funded situation going on here. Can you firstly give us, I want information on this tweet I have pulled up, but firstly give us information on like the team, the lawyers, who you kind of got that you're working with, and maybe like funding. Where's this funding come from? Because that's, 100K. You said you have 200 startups in the pipeline, or 150 last I checked, and over 100K, 100K grants for each one. That's significant.
So yeah, to kind of run a business and to start a business, you always have to invest a certain amount of money into it. We're actually pre-seed. We haven't taken any funding at all, and I'm kind of always against going to VCs early. I think you should always like maximize your own traction and your own kind of inevitability first before even like going to VCs and asking them for money. Eventually, we'll have like a small pre-seed round. I think end of October is a time for that. But yeah, it's largely self-funded. I mean, I've been trading for a long time now. I obviously had good and bad trading decisions, but I was able to make some money, I guess. Yeah, regarding like not every startup actually receives 100K. Not everybody that applies gets 100K. There were very, very weird applications as well, and we obviously don't have like a high acceptance rate. It's around like 2 to 5% right now, I think. So yeah, if we actually like we got a lot of great startups here to apply. Some Y Combinator ones, some people who have been previously funded by A16C. So yeah, very prestigious founders, I guess. And yeah, if they end up actually tokenizing through us and adopting the ERCS standard, then they will receive the 100K as a pure cash grant, no equity, no anything.
And are these startups, are they yet to launch? Are they like already generating revenue, or are you just like getting them from like the like pure ground level, or are you just like helping on the tokenization side? Like, at what point are you coming in or being introduced to these startups?
So usually there are between pre-seed and seed, so they are early stage, and I think that's pretty good for tokenization, because then you can kind of plug in a token pretty easily, while if it's already mature to Series A, then it's a bit harder because the product is usually very mature. And yeah, you can do it pre-TGE, you can do it post-TGE. So in case any good protocol which actually takes something from 0 to 1 and isn't just like I guess some useless idea, then they can also just plug and play into ERCS, and eventually also are able to turn their ERC20 or SPL token into a ERCS or SPLS token.
Are there any of these startups that you can speak on, or because I really want to ask you what like, are there any ones that you're most excited about? But I'm assuming you can't.
I've heard about a little robotics one. Little birdie's been telling me something about robotics, something about San Francisco, Silicon Valley. Maybe something there.
I can't really share which startups I'm talking to. There's one robotics company actually out of Silicon Valley, actually out of San Francisco, which applied to this, which is very interesting. I initially just wanted to go to China and talk with robotics companies there, with humanoid robotics companies, because I think they have a bit larger use case for ERCS, because they are currently cut out of the American market, out of the American capital market, and it's not easy for them to raise funds and to create awareness for American investors. Figure AI, for example, is a startup which succeeded in like getting their equity and kind of their idea across to American and international investors. And I mean, right now they're valued at 37 billion, I think. So yeah, there's a lot of value in getting your kind of Chinese, Hong Kong, Singaporean startup to really be accessible for the American market.
So it's interesting you say that, because we had Kodak on this Monday, one of the premier robotics plays on, tokenized robotics plays on Solana, and they said the same thing. Like, they're really. I asked him, because he's based out of Dubai. I said, "Are you positioned to move to San Francisco to maybe capture some of the startup robotics culture there?" And he's like, "Honestly, China's where it's at, and all our partnerships, relationships are in China because they're super cutting edge over there." So that'd be interesting. Have you made that trip to China yet, Maya, or just in the works maybe?
No, I'm in San Francisco right now talking to startups here, because it's a bit easier to onboard these people, and because I'm currently like in the talks with, for example, A16C. I'm gonna meet with them, I think tomorrow afternoon, because they invited me to talk about ERCS, and I really want to have like maybe one very, very prestigious VC to back me, because it's always hard.
How did you get this deal flow?
Jesus.
which like
That's
I mean
nuts.
I'm not funded by them. I'm not saying that, and they're not yet endorsing this, but I mean it's not that difficult to get meetings, I guess, if you actually create and invent something, which is great. Avi Patel, actually, shout out to him, also helped me a lot, kind of getting foot and traction in Silicon Valley. Yeah, I
Nice.
met with him yesterday for the first time. We went to Founders Inc., which is like a startup hub where a lot of these very talented Gen Z startups are. A lot of like hardware startups are currently having this blueprint accelerator. Yeah, it was very great and very kind of refreshing to get in touch a bit more with the startup culture here.
That's awesome.
Is Avi, obviously you and Khaled have a good relationship, you and Avi, I should say. Clearly you're pioneering. At the bottom here of this post, Avi recently released their white paper. Oh geez, what am I doing? Oh geez. Avi recently released their white paper, and we can see at the very bottom, point 7, I believe it was, he mentioned their tokenized equity model, the future of CLED anchored equity. Obviously, that's you guys pioneering that. Is Avi like a part stakeholder in Street? Are you guys?
Yeah, he
What's that
will own
relationship?
like a advisory portion because he helped a lot with kind of getting everything rolling, but he doesn't have like a co-founder role or similar.
Got
And
you. I'd also,
if I can,
yeah. What's up,
if I
Kip?
before we get too far away from this A16Z meeting that you're having, what's the purpose of that meeting? If you can disclose that, and like, is that establishing a relationship? Or are you expecting kind of them to help help fill your pipeline? Like, what's going on? What's the value there for you or for Street?
Yeah, I think it's just to kind of explain what we're doing and to kind of get my point across why this is like a valuable idea and kind of how I want to approach this. I mean, I had a few other meetings with like larger venture capital funds, with Paradigm, with Drapa. So
Jeez.
yeah,
Wow.
I do think it's something which is very interesting. A lot of people are kind of seeing the same thing as I am, and yeah, they either want to like get to know me a bit better, or I at some point maybe invest in Street.
So the one thing that I just wanted to ask, the last thing I'll ask you is this. In a perfect world, because obviously you have this great idea. You're attracting a lot of attention. You're getting, a lot of doors opened. You're facing, you're rubbing elbows with a lot of big folks. They're interested in this idea, and I do see a world where the kind of tech investor capital is kind of attracted to this ICM sector that we're all building out. In a perfect world, like what does ICM look like? Where do these kind of folks like A16Z and these big VC firms, where do you see them getting involved? Do you see them wanting to kind of like come on chain and directly invest? Probably not, maybe too risky. Or are they looking to kind of invest in sort of like incubators or platforms? Like, what does their involvement look like? What are they most interested in?
Yeah, in the first place, we have to prove that tokenized startups win over untokenized ones, and I think Colette will be the perfect case study for this, because I really do believe that kind of what they already did and how they managed to accelerate their business growth, and kind of what they're about to do, especially like in the next few weeks, is going to showcase very, very well how tokenization benefits these startups. So eventually, and that's my goal, is that A16Z and all these large venture capital funds will go to their startups and ask, why are you not having a token yet? And yeah, I think that will be like the major kind of breakthrough where these huge venture funds like A16Z will kind of help ICM grow, is by kind of getting their startups to use this distribution mechanism, which crypto is, and preferably use ERCS as the go-to way and the go-to strategy.
Wow, so you're really like unlocking, a you're unlocking an entire, like, not only just wave of capital, but you're introducing, you know, this little part of crypto to, these big players. That's absolutely amazing, and I'm blown away. So I can't talk anymore. So Dom, you take that. I know you wanted to ask
Well,
something.
we've seen the SEC, make statements saying they're like aggressively moving towards bringing markets on chain, right? So it's just naturally progressing in this direction. To kind of pivot a little bit, you talk about these street points. We mentioned that you and Avi have a good relationship, kind of taking this advisory role, helping you get a footing in Silicon Valley a bit, in San Francisco. Maybe tell us a bit about these street points. We know that Kled right now is currently the only proprietor of those points. Just what's going on there?
Yeah, I mean, I can't disclose a lot about it for legal reasons, but yeah, I mean, they're valuable. Let's just keep it in that way. I can't really say a lot about it, but yeah, it's not a, I guess it's not a bad thing to have in your portfolio, especially because
Okay.
they don't cost anything. Like, you can just farm them for free. You don't have to use our platform, give me any revenue, I guess. So yeah, I think it's a pretty fair
Okay. Well, so
distribution.
maybe without speculating on the value of these points, I'll just chime in and say I would imagine it's some form of airdrop for street, but you don't need to confirm or deny that. But maybe speak about the mechanism a little bit. You mentioned here that it's going to be potentially split moving forward between like Kled and another project. Kind of explain how that works. As you onboard new projects, maybe the point distribution will be split between those holders, or just explain the mechanism there.
Yeah, sure. So right now, everything, like the whole emissions, go to Kled holders. In the future, in case any other startup decides to go to ERCS, it will be adjusted. So yeah, these points will go to like different tokens. I think it's a pretty straightforward approach. If you hold a certain amount of Kled tokens, or if you just hold one Kled token, you will get street points.
Makes sense. We never actually covered it. Your team. Clearly, you got a good team of lawyers behind you, maybe a sizable team with you. Can you touch on who you're kind of working with, the size of your team, maybe expertise, etc.?
So yeah, we're extremely lean actually, because we don't need like a huge tech stack. We need more like a legal stack. So we do have like great legal advisors and a great legal team, but from the pure business sense, very extremely lean. It's just me and the BD role right now, who's helping me doing all these calls, etc. And yeah, I'm really a big believer in keeping your team as lean as possible in early stage, because else you kind of lose sight and traction. And obviously you can like freelance, or I guess source like tasks like website creation, etc. to other people, and that's kind of the way to go over hiring a lot of employees.
Okay, no, that totally checks out. A random question I want to hear your thoughts on. Since you're not a launchpad, maybe you guys create a launchpad in the future, so maybe you can't speak on this too much. But who do you think is positioned right now, particularly to succeed in this ICM narrative as a launchpad? Would you say that goes to Believe? Do you think Heavendex has a good shot? Do you think Bonk or Pump? Just, I don't know, maybe general thoughts there.
I mean, yeah, I don't know. Ben, so somebody has to like hit him on the head one time so he kind of gets back in the right lane. But
You're talking about Ben, I'm assuming?
yeah, I don't know. Like, he's not a stupid person, but he's just wrong in his approach, and I hope at some point he will like get that and like understand it a bit more, and maybe trust his advisors, which really only want the best for him and for his startup. And yeah, I really hope he kind of gets back in the right lane, because I like him as a person. I spoke with him a couple of times, and yeah, even though I don't think that he's currently in the right lane, I think eventually they have like the best chance of really succeeding. But yeah, I'm not advocating to buy Launchcoin and endorsing Launchcoin right now.
What
Matt
is the
Block.
right lane?
Yeah, that's the next question I was going to ask.
Well, he kind of wants to replace equity with coin, and I think that's yeah, low-key retarded. That doesn't work. There have been centuries of legal frameworks on equity. Everybody on Silicon Valley, everybody kind of in this whole economy and capitalism works on equity, and nothing really works on token. There's no accountability and enforceability layer on tokens, and kind of getting rid of the idea of equity is, I don't know, it's very ambitious, to say it nicely, and it's a bit retarded, to being honest. So
And I'll ask this as well, because I believe some have the view of um, equity. You're kind of moving backwards. Like, we're in crypto. Crypto is kind of be this is going to be this revolution, um, this innovation that will push finance in a direction it's never been before. So some might venture to say, well, it kind of would make sense that we go straight to all tokens, and perhaps there's some regulatory framework that can be built around tokenization, and to get all of those kind of protections that you'd get with equity. What would be your, I mean, I guess we kind of already know, but would you speak on that a little bit? Like, is there a world where we have some sort of framework around tokens, and tokens is all you need?
yes, there's for sure a world, but in that world, the SEC doesn't exist. So yeah, I mean, there are regulations for a reason, and there are security regulations for a reason. And yeah, I mean, if we could just do stuff like this without getting into prison because of like securities fraud, then it would be awesome, I guess. But we have to stick to these regulations, and find like the best middle ground as possible, which is ERCS.
What do you say? Because we see Kled has like a built-in flywheel mechanism, if you will, with their token as well, where a percentage of profits or revenue coming from their deals that they make will go towards buying back the token. Do you think that model is a good model where it's equity and flywheel, or do you think it should just be one or the other?
It should exactly be this, like equity, like this, having this kind of equity anchored approach, and then a flywheel. That's the best model possible, because you create value by buying back your own token, by constantly having like buy pressure, and you create value because your token is intrinsically valuable because it's tied to equity.
Do you think there's a world where, let's say you are an on-chain application, Hype's the best example of this, and they're doing constant buybacks. Let's say their buybacks, 100% buybacks, are even built into the smart contract, so they're going to happen. Do you think there's a world where on-chain apps can go without, an equity anchor and do just a flywheel, or you think no, it's got to be equity?
No, yeah, it has to be equity, because as an early stage startup, you can't spend all your revenue on buybacks of a token. That doesn't work. You have to like reinvest your revenue, and you have to make sure that this money goes to the right places. So if you just spend it back on a token, it's very stupid. As a startup, you can't, like a untokenized startup, you can't just use all your revenue to buy back the equity you gave to VCs earlier, because then you will like just kill yourself. So yeah.
For sure. No.
So with that in mind, I guess that brings me to another question. You mentioned that like flywheels for startups just isn't the best use of capital at that early of a stage in a company. I mean, um, seeing that flywheel plus equity backed tokens is kind of an ideal outcome for you. At what point would flywheels kind of come into play?
I think they should come into play at a very early stage, but they shouldn't be close to 99%. I think you have to have like a conservative number, and you should also not hard code this number, because there will be good times and there will be bad times in any company. So if you kind of hard code it and promise these holders to always get like, I don't know, 50% buybacks of the kind of platform revenue, then it's just bad for in case like times worsen, and you make less money, and or you have some other problems. So you should buy back at kind of your own discretion.
Copy.
Got it.
I think we just took in a ton of information. We took in some of
Yeah.
the big funds you're talking with. You mentioned plenty. You talked about robotics and your stuff there. You talked about points. You talked about your partnerships with Kled and relationship with Avi. I think we kind of covered most of it. I think we have a really good idea on this ERCS standard. More info in that docs if you want it. Maiya, maybe just give us outlook, alpha, what you're excited for, what's to come, why we should be excited for Street as you kind of close this off.
Yeah, I think kind of the main thing everybody should be excited of is that these charts will definitely look better than the charts that are like usually right now, because that was kind of my whole motivation of this thing, that I really want to make charts look better, and that I really want to make token holder value as something as great as shareholder value, because in like TradFi you only work to maximize shareholder value. If you go to like any like if you go to Starknet right now and ask their founder if he's working to maximize token holder value, like it frustrates me that this like not the norm in crypto, and kind of that's what I wanted to change with ERCS. So yeah, I'm very positive and kind of optimistic about kind of these charts will actually which implement this token standard are gonna look great.
I think it's a valiant effort. Is this also going to be, let's just say, I'm a startup company. I did a round earlier, and there is some fund has a portion of my startup in equity. Are they going to be able to liquidate and sell that equity on the market through, once the token is tokenized, or is it only for that specific portion of equity that was purchased through the SPV?
So the equity isn't actually purchased by the SPV. The founder locks it inside that SPV. So we don't purchase equity of a startup, else we would have to have like $1 billion in seed funding. Yeah. So sorry, can you like repeat the question?
Yeah. So I guess if I had, let's just say there was a original raise at 10 mil, then their next raise was 40 mil, and you either wait for a liquidity event as an investor or private investor. Would those private investors that had bought in the previous rounds be able to sell into the liquidity pools of the token that's
Okay.
do you understand?
Yeah, I understand. So they obviously can do this conversion, but this conversion has to be through like an OTC settler. Like you can't have this, like then it would be a wrapper. Then it would be something where you can like put tokens in and get equity out, and vice versa. And if we do that, then it's considered a security again. So I think it's possible to do it via like an OTC brokerage, but I don't really think it's beneficial for anybody. What you can do, for example, is like you can hedge your position, and that's a really, really important thing in which is missing in private equity, because private equity is kind of the last financialized sector in the world. If you invest in something as a VC, you don't even have a price quote. Like you don't know how much your investments are worth. That's to begin with. Then you can't like hedge your positions. You can't buy options on your positions. You don't have money markets on your positions. No futures, no anything. And by having like ERCS, it kind of allows private equity to kind of have all of this.
Cool. Man, I think we covered it. Maiya, it was a pleasure to have you on. This stuff is super informative and interesting, and we love these experiments. So we appreciate what you're doing, and thanks for coming on.
Yeah, thanks for having me here.
We'd love to snag you back in a couple months once everything's kind of up and running and you got a few projects that tokenize using your standard.
Yeah, awesome. Let's do it.
Awesome. Take it easy, bro.
Appreciate you, Maiya. Take care.